Welcome back to another Deep Dives. Today we're peeling back the layers on a really fascinating story. General Motors' second quarter 2025 results.
Yeah, it's a big one.
It really is. Our mission here is to unpack GM's latest performance. And it presents this really interesting paradox, doesn't it?
Definitely. You've got these pretty significant financial setbacks, but then they collide with this explosive growth in a really key strategic area.
Exactly. We've looked at financial reports, industry analyses, all sorts of sources. We'll try and pull out the core insights for you.
Get right to the heart of it.
So what does this all mean for, one of the biggest names in cars, and maybe for the future of how we all drive? Okay, let's unpack this.
Well, I think the place to start is that sticker shock, right? The
Yeah.
immediate big number from GM's Q2 report.
Hit us with it.
They reported a substantial loss, approximately $1.1 billion
Wow.
in the second quarter of 2025. And this wasn't, just some market dip.
What was it then?
It was directly attributed to commercial tariffs, the ones imposed by the Trump administration.
Okay.
They specifically noted a significant net impact on costs from these tariffs, affecting, imported parts, materials, right across the supply chain.
$1 billion hit directly linked to tariffs.
Yeah.
That's immense. How did that actually ripple through the rest of their financials?
Oh, it definitely left a mark on the bottom line.
Yeah.
Interestingly, though, GM did manage to beat Wall Street estimates on revenue.
Oh, really?
Yeah, revenues hit $47.1 billion. So the top line looked okay.
Okay.
But their adjusted operating profit, earnings before interest and taxes,
Right.
that core profitability measure.
Right, the operational performance.
Exactly. That saw a really sharp 35% decline.
35%.
Yeah. It dropped to $3.04 billion. That's down from $4.43 billion in the same quarter last year. And yes, primarily, they're saying because of these tariffs.
Okay, so a massive hit to profit, even with decent revenue. That's quite a balancing act to absorb a blow like that. What are they saying about, going forward? Are they just accepting this?
Well, yes and no. They're absorbing it short term, definitely. But they have a clear, almost, you could say, audacious strategic response.
Okay.
First, they actually confirmed their full year 2025 financial forecast.
Even with this hit?
Even with it, they're anticipating tariff costs for the whole year somewhere between $4 billion and $5 billion.
$4 to $5 billion.
Yes. But here's the kicker, the strategic move. They also announced a $4 billion investment,
Okay, an investment in what?
aimed specifically at reducing their future tariff exposure. They plan to shift production away from overseas locations and bring it into North American plants.
Ah, okay. Reshoring, essentially.
Pretty much. It does raise that big question, doesn't it? How does a company take such a huge hit, expect billions more in costs, but still stick to its forecast and spend billions more to fix the underlying issue?
It really speaks to a very deliberate long-term plan, like you said, strategic, almost like sacrificing something now for a bigger game later.
Exactly, like that chess analogy. A calculated risk based on where they see the future.
And that long-term conviction, that seems to power the other side of this story, doesn't it? Their really explosive growth in their EV sales.
That's the paradox right there.
Is that EV commitment maybe influencing the tariff strategy too? Or are they just fighting on two fronts?
I think they're deeply connected. Despite those tariff headwinds, the financial pressure, GM saw a massive 111% increase in EV sales compared to Q2 last year.
111%.
Yeah,
Yeah.
more than doubled. They sold 46,280 electric vehicles across Chevy, Cadillac, and GMC.
Oh.
It suggests they believe the future is electric, fundamentally, and they need to secure the manufacturing base for that future, ideally closer to home.
Okay, that makes sense.
Yeah.
That growth is incredible, though, 46,000 units. Was there, one brand really driving that? Or was it pretty broad? I'm thinking Chevy.
Chevy had a huge quarter, actually became the #2 best-selling EV brand in the U.S.
Number two, who did they pass?
They surpassed both Ford and Hyundai, which is, a pretty major shift in the EV landscape over here.
Yeah, no kidding. And sources say a big part of that was the Chevy Equinox EV.
Absolutely. That seems to be the key driver. It's described as the most accessible EV with over 315 miles of range.
That hits a real sweet spot, doesn't it? Decent range, presumably decent price.
Yeah.
Accessibility.
Exactly. Practicality, range, and crucially, you'd assume affordability. That's a winning combo for many buyers.
And it wasn't just Chevy, you said. Cadillac, too.
Oh yeah, Cadillac is really cementing itself as a leader in the luxury EV space.
Right.
Their lineup's growing fast. You've got the Optic, the Lyric, the Vistique, and that huge Escalade IQ.
Yeah, the electric Escalade.
And get this, EVs made up over 25% of Cadillac's total sales in the quarter.
A quarter of their sales. For a brand like Cadillac, that's significant. Shows luxury buyers are really embracing electric.
It really does. And we shouldn't forget GMC either. They're seeing continued momentum with things like the Sierra EV and the Hummer EV.
Right, the electric truck and SUV space.
Yeah,
So it's across the board then, a multi-brand push.
definitely not a fluke. It's broad-based.
So how do they plan to keep this EV momentum going and, I guess, critically make it, more profitable and scalable long term?
Yep.
That's always the question with EVs.
Well, they're thinking about the core components, the supply chain. GM is expanding its partnership with LG Energy Solution.
Okay.
The goal is to produce lower-cost lithium iron phosphate batteries, LFP batteries.
LFP, right? I've heard about those.
They'll make them at their joint venture plant, Ultium Cells, down in Tennessee. This is really crucial for affordability and scale.
Why LFP specifically?
Well, generally, LFP batteries are cheaper to make. They're more robust, last longer in terms of cycles, and critically, they use more abundant materials. Less reliance on, say, cobalt and nickel.
Ah, okay. So that directly tackles the cost issue, one of the biggest hurdles for EVs.
Exactly. Lower-cost batteries could be a real game changer for making EVs truly mainstream and competitive on price.
And are they still rolling out new models too, keeping the options fresh?
Seems so. They're anticipating launching a new Chevy Bolt EV model by the end of this year.
The Bolt, they're bringing it back.
Apparently so, promising improvements in range, charging, and importantly, price.
Interesting.
So if you connect all these dots, the investment in North American production, the focus on LFP batteries, the new models, it's clear GM sees EVs as their North Star.
Their North Star, I like that.
Yeah, it's guiding their strategy towards, long-term profitability and sustainability. Even with this big immediate hit from tariffs, they are absolutely playing the long game, betting big on electric.
So, okay, let's try and synthesize this. What does it all mean? For GM, for us, for the wider industry, you've got GM navigating this kind of dual challenge.
Yeah, it's fascinating.
Battling these big external economic pressures to tariffs while simultaneously pushing super aggressively into this transformative but still, developing market for EVs.
It's like they're trying to build the future of the company during a hurricane, as you said earlier.
Yeah. What does it say about a company's strategy, its resilience, when it takes a billion-dollar hit, sees billions more coming, but stays laser-focused on its long-term vision?
It speaks volumes about their strategic clarity, I think.
They're even investing heavily because of the hit to mitigate future risk and double down on electric.
It suggests they truly believe the EV future isn't just like an option, it's essential. Core to their identity, their survival long term. This isn't just adapting. It feels like they're trying to aggressively reshape their whole business.
And for you listening, how might this GM strategy impact things? The availability, the affordability of EVs.
Well, if they succeed with lowering battery costs through LFP and keep pushing accessible models like the Equinox EV or this new Bolt.
That could be really good news for consumers, right? Potentially speeding up mainstream EV adoption if prices come down.
Absolutely. And it also tells us something about the broader industry's pivot. Even with economic headwinds, policy shifts. There seems to be this deep conviction across major automakers that electric is the future.
And they're willing to take some serious short-term pain to secure a strong position in that future.
Yeah, the moves we've talked about today really show a commitment that goes way beyond just the next quarterly report. It paints a really compelling picture of where things are headed.
Okay, so today we've taken a deep dive into GM's Q2 2025. We've seen a company really grappling with immediate financial pain from tariffs,
A significant pain point.
yet firmly, resolutely steering towards an electric future. That tension between the losses and the explosive EV growth, it really paints a vivid picture of strategic conviction.
It really does, focusing on the long game despite those headwinds, making these big, bold investments in their strategic North Star.
So this leaves us with a question for you to think about. As global trade policies keep shifting, they always do, and this push for electrification just keeps accelerating, how might these two powerful forces, economic policy on one hand, technological transformation on the other, keep shaping the car industry in, unexpected ways?
Will more companies follow GM's lead, maybe bringing production closer to home? Or will we see other different strategies emerge to handle these pressures?
Something to mull over until our next deep dive.